Ladies and gentlemen, good day and welcome to the Pokarna Limited Q1 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Gavin Disa from CDR India. Thank you, and over to you, sir.
Thank you. Good day, everyone, and a warm welcome to Pokarna Limited's Q1 FY23 earnings conference call. We have with us today Mr. Gautam Chand Jain, Chairman and Managing Director, and Mr. Paras Kumar Jain, Chief Executive Officer, Pokarna Engineers Store Limited. I trust most of you have gone through the communication and the results mailed to you earlier. In the interest of time, we would like to commence with Q&A immediately. So I'd like to hand over to the moderator, Mike, to open the floor for Q&A. Over to you, Mike.
Thank you. We will now begin the question-answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have the first question from the line of Dixit Doshi from Whitestone Financial Advisors. Please go ahead.
Hello. Thanks for the opportunity. My first question is regarding this. Recently, U.S. Commerce has came out with the preliminary duty notification in July. So if you can elaborate on that, so now we don't have to pay anything, and in that notification, the competitors were levied 166%. So is it the final, now the competitors are paying this much duties, or final outcome will come in November or December?
Yeah, thanks, Dixit, for the question. The Department of Commerce preliminarily announced the anti-dumping duty for Pokarna to be 0%. And this is subject to the final outcome, which is expected to happen any time between end of October and December. So the duties are still not final and are subject to the final outcome by the DOC. So currently our products are subject to 2.67% as a cash deposit, in which 0.33% is the anti-dumping and 2.34% is the countervailing duty. So while the anti-dumping has been set at 0.00%, that means 0%. The counter levying of 2.34 will continue for this POR.
Okay, and what about the competitors? So from July to, let's say, by the time the final outcome come in December, how the competitors will have to pay?
Basically, the duties are paid by the importer of record. So it is not necessarily the supplier who pays it. It can also be the buyer who is going to pay it. So while the preliminary duties have been announced, they have not yet come in force. They will come into force only after the final duties have been announced and certain other procedural aspects which happen post the announcement of the final duties. So I think if the duties get announced somewhere in October end, then probably 4 to 6 weeks after that, or if it is announced in December, maybe 4 weeks from there. Typically, by the time the customs get the notifications printed and all that will. So the goods entering only after those dates will have the new duty. Any good entering before the notification is of the the Customs Department will continue on the old rate.
Okay. Now my second question is regarding the demand outlook. So, we had a very good quarter Q1. So how do you see the order booking for next 2-3 quarters and demand scenario in the US?
Yeah, I think with the pandemic-related demand getting relatively behind, so and with the talks of recession and other challenges coming, so we don't see a bleak quarter, but at the same time we are very cautious about the future. So at the moment, we are very cautious as to how the demand will pan out. I think it will take at least a couple of quarters to see how the demand is panning out. It's too early to comment now.
Okay, and my last question, and then I join back in the queue. How is the resin prices moving?
Would request you to kindly join back the queue for follow-up questions.
Okay, fine.
Thank you. I request you to kindly restrict your question to 2 questions per participant. Participants are requested to kindly restrict your questions to 2 questions per participant. We have the next question from the line of Sonal from Bowhead. Please go ahead.
So thank you for this opportunity. I had 2 queries. Firstly, assuming the anti-dumping duty goes through, for the competitors, what kind of market share gains or strategic gains you could see, if any? And secondly, as far as the freight rates are concerned and the resin prices, etc., are concerned, or since you have you don't have your entire business as FOB, what would be the impact? When would you see the benefit of lower freight prices and raw material prices for you? Thirdly, if you may allow, what are the levers available to you to, be able to sell whatever production you do over next, 1.5 years once everything stabilizes, even if US demand is a bit weak, considering your market share? Thank you.
Okay. So coming to your first question as to what will Pokarna benefit from the spillover of demand arising out of the anti-dumping duties on certain participants out of India. See, basically, unless there is a complete clarity on as to how this is going, it's difficult to comment. So I think we'll be able to talk much about it only once the final duties come through, because there are different price brackets at which the competition operates, and those price brackets may not fully be lucrative to us. So we'll have to see how we use that platform to leverage. So I think probably when we speak, maybe in the third quarter or maybe at the end of the calendar year, we'll have more clarity as to how the spillover will benefit us or not. Now coming to the raw material prices, the raw material prices have recently started, not all the prices, raw material prices, but more specifically the resin prices seems to be now tapering down. So we think that the entire benefit of that would probably come in the third quarter when we see that the prices really slide and stabilize. I think we'll have to wait till the third quarter for us to see the benefit of the resin prices getting stabilized.
So the third question was regarding your low market share, and would you be able to sell, or what levers are available for you to sell?
You to kindly restrict your questions to 2 itself and join back the queue. We have the next question from the line of VP Rajesh from Banyan Capital. Please go ahead.
Yes, hi. Am I audible?
Yeah, you are.
Okay. Thanks for the opportunity. If you can just comment on the capacity utilization in the June quarter, and then secondly, what is our debt number at the end of June? How much debt have we paid down? Thanks.
Yeah. So capacity utilization in Q1 has been better than the Q2. While the product mix continues to be what it was, but slightly there has been an improvement in the capacity utilization. We believe that as we progress and once we have more clarity on the demand outlook, either arising out of the economic indicators or from the DOC, we'll be able to ramp up the capacity. We have little cushion in the capacity to go up further. That answers your first question typically. Now on the debt side, you're looking at the term loan side or working capital?
Total debt. I think you had indicated last time that you'll pay down 100 crores in this year. So I was just wondering if that process started in the June quarter.
Consolidated debt is 516, which includes granite and also the quartz divisions, both term and
including both the term loans and the working capitals.
Okay. Thank you. And just a quick question on the capacity utilization. Last time you gave the numbers, so if you can just share the numbers, if that's possible.
I can only say that capacity utilization has improved than the past. So I think Please excuse me on the number. Thank you.
No problem. I'll get back in the queue. Thank you.
Thank you. We have the next question from the line of Vikram from Niveshaay Investment. Please go ahead.
Hello. Yeah, hi sir. Congratulations on good set of numbers. So I had a query related to what was product mix in the current quarter, basic product and premium products, and what is our outlook on generalized EBITDA margin going ahead?
See, basically the product mix in this quarter was relatively better than what we had in the fourth quarter. But it is still not at the level where we want it to be. So it's going to take some time for the product mix to stabilize, and that's again correlated with the demand scenario. So that answers your first question. Coming to the second question on the EBITDA margins, basically our target at the moment is to come to EBITDA level of 30%. And once we have little stabilization, the resin cost, we believe that that number is possible to achieve.
And what is demand outlook in US market? Is there any challenge in order book or?
So I just answered at the beginning of this call that we are closely watching the demand scenario in both kitchen and bath industry in the US with the talk of recessions and certain other economic indicators not being so lucrative for any other business as well. So I think we'll give a better clarity on the demand outlook probably in the third quarter, because that will give us a lot more indicators as to how things are panning out, how the inventory position is in the US, and how the Department of Commerce investigation actually spills over some demand.
Okay.
Thank you.
Thank you.
Number to kuch de hi nahi.
We have the next question from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Sir, I missed your comment on when will you start seeing benefit of resin and freight cost prices lower, and what is your debt repayment schedule for current year and next year?
Okay. So resin prices, we think that the benefit will start coming in from the third quarter completely, because there are certain contracts which have extended pricing for the raw material. And the freight cost has come down, but it has still not come down significantly. And so I think more than the shipping cost, we are more eager to look at the benefits from the resin prices stabilization.
Regarding the debt payments, we have a schedule from the banks, and that will start falling more from next year. But this year, maybe we will pay about 10 to 15 crores what is due to pay during this year, financial year.
Okay. And how much of your material is FOB?
It is largely the large component of our business is FOB.
Okay, large component is FOB. Okay. And have you formed up on any expansion plan?
Yeah, as a business, we keep looking at the opportunities as they keep coming. So while we have not formed up any business plan for expansion at the moment, but we keep looking at the options, and I think when we believe that it requires a serious consideration, we'll take it for the appropriate approvals internally and then inform the exchanges.
Any movement in quartz price?
I didn't get your question.
Any rise in quartz prices, the material, the
raw material you're asking?
Yeah.
Basically, the trend with the raw materials has always been, at least in the recent past, on the higher side. So there is a little firm up on the pricing because of general increase in the cost of doing business.
Okay. And lastly, you are targeting 100% utilization by year end. Will you be able to achieve it?
100% is, I don't know if we ever said 100%. We always believe that optimum capacity is about 85%. So if the demand scenario continues to be positive, I think 85% is positive.
That's 900 to 1,000 crore revenue, right?
I'll let you do that mathematics.
Okay. Thank you, sir.
Thank you.
Thank you. We have the next question from the line of Rupesh Tatia from Intel Sense Capital. Please go ahead.
Hello, sir. Can you hear me?
Yeah, we can.
Okay. Sir, at the end of Q4, I think our finished goods inventory position was 85-86 crore. What would that position be by end of Q1?
You're talking about the inventory?
Finished goods inventory, sir.
Finished goods inventory. Give us a moment. You have any other question?
Yeah. Is there a one-off in this quarter? I mean, is it that shipping lines got better and some inventory in the channel got cleared? Is there a one-off in Q1 number?
Are you talking about the consolidated inventory of granite and quartz?
Yes, sir. At consolidated levels, yes.
Yeah. So overall,
So there is a little change. From 85, it is about 81.
Okay. So there is no one-off, right? In the Q1 number that inventory in channel got consumed, there is no one-off.
No, see, basically, as per the policies what we have in place with regard to the inventory valuation, we consistently use those policies. So we have not reported any exceptional item there.
No. In terms of sales, I was asking, sir.
Sorry, your voice is little.
In terms of sales, I was asking.
sales.
Sir, was there inventory in the channel? Generally, let's say we consume maybe X inventory in channel every quarter. Was it that 10-20% of inventory in channel got cleared and got sold to consumer, and now it is being shown as revenue? That is the question.
See, basically, we don't do that type of accounting. Our accounting is typically when the risks and rewards are transferred. That is predominantly when the goods are delivered at the port. So we don't account for based on the sales which our consumers do. So there's no consignment sale from our side. So whatever we have recorded is when the risk and reward are transferred, when the container is delivered at the port.
Okay. And my second question, sir, is it has Hyderabad unit reached the EBITDA margin level of Vizag unit?
Not yet. It will take some time because the product mix has still not reached to the level
We do in
Vizag.
Okay, and what is the contribution of newer products, because there are some newer capability. It's just a follow-up of the unit question.
All right.
I'll just finish this. Yeah. So what is because in Hyderabad we have some new capabilities, right, to do super jumbo slabs and larger thickness slabs. So what is the contribution in FY22 and Q1 from these products which require new capability?
As we have maintained in the past also, that currently the products with higher capabilities have still not been commercialized in Hyderabad plant, because it takes certain time for product to be developed, people to be trained, and product to be marketed. So we are still not seeing the products from the investments which we have made in Unit 2. So I think another couple of quarters, by the time we start developing those products, and of course we have developed and we are now starting marketing it, so it will take at least a couple of quarter for the products to get acceptance and the manufacturing to start.
Q4 we can expect some commercial revenue from those?
Mr. Rupesh would request you to kindly come back in the queue for your follow-up questions.
Okay.
Thank you. We have the next question from the line of Mr. Sachin Kafera from Swan Investments. Please go ahead.
Good morning, sir. Just wanted to check if you can give us some update on how is the domestic business shaping up.
Yeah, so domestic business is growing for us, but of course, as a part of our entire portfolio, it is still a very small number. But the year-on-year growth is promising, and we've been able to add about 100 plus dealers across India now. So our product is available for display, and consumers can walk in, touch and feel the product, and can also order via our dealer channel. So I think it will take some time for it to become a sizable component in the business, but I think the demand and the channel development exercise what we are doing looks very promising to us in the long term.
So, sir, just a follow-up on this. So, one is that, when we can expect some good numbers from this. Secondly, what is the type of feedback you are getting from consumers? And are we also starting to look at the project side of this business?
Yeah. So, see, basically for this business to reach a sizable critical mass, I think it should at least take 3 to 5 years, because we are not doing a B2B type of approach in the local market. It's B2C, and India with such a wide depth of the country, it's difficult to reach out to every nook and corner. So today we are in Dehradun, and we are also available in Kochi. So that shows that we are now looking at going across the platform. But then still there is a little regional concentration what we have in our network. So now we are focused on basically Kona, Quandra, we are looking at. So once we are able to be there, then the demand cycle typically will become as it is in the retail side, the US business. Now coming to, what was the second question? Sorry.
One was the response and feedback from the customers who have bought, and secondly, are we looking also at the project side of the?
Yeah. So we've done a project already in Hyderabad with a very large multinational bank out of US, and we made their South Asia's technology headquarter. We supplied the product there, and then we are also doing their other headquarters coming up in other parts of our country. Apart from that, we are also doing some other commercial projects also. So we've got into both the retail side of it and also institutional side of it.
And can you comment anything on the feedback we got on the retail side from the customers in terms of what is the feedback and what type of reviews we are getting, and what is the feedback and what we need to do?
Basically, this is a unique business model. There is no other company in the country today which gives you a 360 degree of solution, where we come for the initial measurement to finally installing the product and doing everything in between. So this is a very unique experience which only currently the consumers in the developed world like US and Europe have it. So this is a unique business model, and consumers are quite happy because we don't have any they don't have any hassles of actually waiting, for people to come, arrive, and then do the fabrication at the site and create pollution, noise, and everything associated with that. So, and there has been repeat demand, and the fact that we are getting the references from our dealer channel, that's what is expanding our network. So, when we tie up with a particular kitchen retail chain, they themselves are referring them to us to the other constituents of their business in the other parts of the country. So that is where the feedback is actually coming, that okay, we are convinced with this product, and that's how they are referring it to their extended trade partners. And also on Google reviews, you can look at it, you'll find hundreds of reviews there from the consumers directly.
Thank you very much.
Thank you.
Thank you. Participants are requested to restrict your questions to 2 per participant. Participants are requested to kindly restrict your questions to 2 per participant. We have the next question from the line of Pratik Singhania from Sage One Investment. Please go ahead.
Hi, sir. Thank you. Sir, my question is with regards to this proposed duty onto the competition or the players in India. So, sir, what if this proposal it stays firm and they give out the final duty? Then what implication do you see on the entire quartz import from US that in US does? And how will we benefit out of that? This is question 1. And question 2 is similar to Indian companies. Is there been any proposed duty on any other players in other countries? And is there any player who is using Breton technology and has this proposed anti-dumping duty onto them?
Okay. Now coming to your question, see, basically this duty would become final somewhere between October to December 22. That's when under the statute, DOC is under an obligation to announce the duties. So it would be possible to comment about the impact on Pokarna because of these duties. I would rather say a positive impact on Pokarna, if any, arising out of these duties can only be provided once the final duties are out. And what happens to the rest of the constituents? So see, basically there are about 51 companies who who may be impacted because of this. That does not include Pokarna. So for them, there is a group of company which will be probably subject to 323%, and then the rest could be subjected to about 161.5%. So if that becomes the final norm, then the 51 companies typically will get impacted to that extent. So any product getting out of those companies into the US will be subject to the duties what I mentioned. But then there are companies who are not impacted because of this, and they will continue to be on the previous rate, which is about 3%. So while there will be a group which will be getting impacted, and there will be probably a group which may not be as severely as impacted as this group of 51 companies would be. Now, coming to your second question on is the similar duty has come on any other product? Yes. So Turkey was also part of investigation like we were, and they also have a relatively similar number like our initial numbers, not like 161 and 323 numbers. So,
but any player with Britain technology?
Sorry?
Any player with Britain technology in Turkey would have received like higher?
No, there is a player in Turkey, a Breton player, who has received a number, but that's not as high as 161 or 323 what you see.
How much that would be, sir, approximately?
That would be less than 5%.
Okay. And this is just a procedural to become a final duty, or there is a possibility of them rolling back this proposed
Basically, I would be doing a crystal gazing if I say this or that. But what I can tell you is that there is a statute under which the Department of Commerce is expected to evaluate all the submissions. So the case briefs are due to be filed this week, and then there will be some rebuttals on it, and then there will probably a hearing as well. So based on the case briefs and the final hearing which will be conducted, the DOC will decide whether it's going to amend its position or it's going to stay with what position it took in the preliminary.
Okay. And sir, if I can just include one last question.
Kindly come back in the queue for follow-up questions.
Okay.
Thank you. We have the next question from the line of Devesh Neodia from Devesh Neodia SNPL. Please go ahead.
The opportunity. So just wanted to understand, considering that there has been a scale change with the new capacity, and right now we are selling only basic products, largely basic products from that capacity. So what is, let's say, our strategy to scale up the premium calls in USA? I mean, the initiatives that we are taking, to increase, let's say, if you can just give some data points like number of salespeople we have ramped up, the distributor expansion that is going there, the price differential which is there in premium calls with the players who are selling the premium calls. So if you can just give a perspective, because now we have to actually sell double the volumes to ramp up the new capacity in premium calls. So just some perspective if you can give on these 3-4 points, that would be really helpful.
Yeah, see, basically the product mix, as we have maintained that the technology requires a lot of training for us to develop a product which we can differentiate in the market and then get a price which we believe is reasonable for that product. And this is fairly a long exercise, and because there are certain cycles within which the product has to be ready and sent to the market so that the overall sales cycle can be accommodated, because it's not possible to immediately launch and the product and trade will not be ready to accept it, because there are certain months or quarters during which typically the new product launches happen. So if we are able to develop a product during that phase, the chances of that product getting properly marketed and the success rate percentages could be relatively higher. So now coming to the difference between how a basic product and a high-end product, there can be almost 100% price difference between a basic product and a high-end product. But of course then the production cycle time will also vary, but it may not really vary 100%, it can vary about 20 to 30 or 40% sometimes. So based on this mix, typically the pricing is done. And then we don't actually determine the prices for resale in the US market. So it would not be possible for me to tell you how customers actually end up paying between the basics and the high-end product at the US market end. I can only comment, as I told you, that prices can vary up to 100% between a basic and high-end product at our end.
So actually, my question for price differential was, let's say when we are selling to the distributor and then the distributor who sells the product at the retail level, the price for these premium products that we are selling to distributor, it's differential versus the competitors who are selling. I mean, since we are competing with different players, so we might have some perspective of, let's say, a player in US at what price they are selling for the similar premium product that we are making, or let's say a player from, let's say, Turkey, what price differential we have. So in that, where do you think in the price band where we stand and our competitors?
See, basically, we believe that consumers don't buy a product, they buy typically a brand. So in the brand, what happens is that there are certain brands who are actually able to sell the same basic product probably at 100% more than what others would be doing it, and probably sell an expensive product 200% more than what the others would be selling it. So the range is very, very wide, and especially since it is a brand-driven proposition, the brand equity associated with the product typically derives those additional percentages what I spoke about.
Okay. And if you could just elaborate on the kind of scale of premium cords in USA. So we know the cords opportunity size, but let's say only for the premium category of cords, what would be the scale which is there in US?
This is a exercise which is difficult to predict with some scientific analysis. But I think if you look at the overall portfolio, about 20% is where the premium lies, and about 80% is where you have the basic to mid-level products coming in.
Okay. And what do you think?
Mr. Neodia, I would request you to kindly get back in the queue for follow-up questions. We have the next question from the line of Anand Jain, an individual investor. Please go ahead.
Thanks for the opportunity, sir. Have you seen a heightened number of inquiries after these duties have been announced? Although they are preliminary, but have you seen many more inquiries after these duties have been announced?
Yeah, I think the trade is a little cautious because things are not final. So I think the level of activity would only arise after some announcement comes between October to December.
Okay. My second question is that the current capacity utilization, is that not being optimum, is that a function of demand, or is that a function of some issues at our end in terms of freight or the plant stabilization or these kind of things?
It is a mix of both, basically.
If you could elaborate a little more on this, why would you say that it's a mix of both? I mean, you see demand also.
See, what happens is that for us to be able to service all the needs of a customer completely at the basic level would be a little challenging, because once we add a customer, it's very difficult to phase out them over a period of time, or give them the products which we want to substitute for. Maybe we'll replace some 5 products of basic ends with higher end. So to that extent, it is basically our side of it. Like, we don't want to take the entire portfolio what is available. That is one side of it. And second side of it, with this little recession and demand tapering things looking down, I think and with the year end approaching, probably the customers are also a little cautious about building up things.
Okay, sir. That helps. My last question is, if you could...
Would request you to kindly get back to the queue, sir, for your follow-up questions.
Okay.
We have the next question from the line of Dixit Doshi from Whitestone Financial. Please go ahead.
Yeah, thanks for the opportunity. My first question is regarding, you mentioned that, there is a price realization difference of almost 100 to 200% if the consumer have a good perception about the brand. So what we do for creating our brand in the US and, any annual budget we have?
Basically, we are currently a B2B organization, but we are also building up B2C organization, and that we started with India per se currently. So while when we go to the US, we typically focus on servicing the big boys of the industry largely. Of course, we do have certain pockets where our distributors operate and sell the product under the brand name Contra. So the different ways we approach on the branding side is that one is that we participate in trade shows where we display our product and where we invite all our customers and their customers to come and see our product, experience it live. And secondly, we also give certain marketing budgets to our Contra brand partners, which they can utilize in their local markets to market, be it advertising in the local magazines or doing all the other point of sale related marketing activities which can be done in that particular regional market. Apart from that, we've started the digital marketing initiatives. You can follow us on Instagram, Facebook, LinkedIn, and you can see that we are regularly active on the platform promoting the products, the projects we've done, and all the exciting news which we have to share with our trade. So digital marketing is one route, the trade and exhibition is one route, then being on the online portals is something which we are doing, and then our partners do the regional marketing.
Okay. And my second question is regarding the margins. So you mentioned that the resin prices have started coming down. So from the peak, how much it has come down? And if we see other than the last 2 quarters, we used to make 33% EBIT margin on the segment result. So can we come back to those margins, let's say by Q3, Q4?
We have seen about 12 to 15% price decrease in the resin so far, and we believe that it can probably go down a little more. That answers your first question. The second question is on the margin side. See, basically margins is again a function of the raw material prices, what we spoke about during this conference call, and also the product mix. So if the raw material side is taken care with the resin prices becoming relatively better than what they were in the past, and if there is an improvement in the product portfolio, what we are expecting will happen in next couple of quarters, then yes, 30% plus can come. Whether it will be 35 or 40, what we enjoyed at some point of time, I think I can only comment as we go closer to that.
Okay, fine. Thank you. That's it from my side.
Thank you. We have the next question from the line of Abhishek from Bowhead India. Please go ahead.
Hello, sir. Thanks for the opportunity. So, considering our market share in USA, which turns out to be...
Mr. Abhishek, would request you to kindly come closer to the mic. We are unable to hear your question very clearly.
Yeah. Hello. Is it better now?
Yes, it is.
Yeah. So, considering our market share in the USA, which approximately comes out to be just around 1%, so considering there is a slowdown in demand to some extent, how much confident are we for utilizing our capacity at optimum level, or let's say at the level that we are currently utilizing it?
See, as you see, the demand scenario seems to be, is not possible to completely predict how the things will pan out. But if the things stand as they are today, then I think the numbers can be range bound. But if there is a little slowdown in the US market, to that extent, I think we will also not be insulated, is what we believe.
Okay. So, just one more question. Considering the new plant will be making super jumbo slabs, so would it be safe to assume that when we're utilizing that plant optimally, the margins will be better than the old plant, considering the market for super jumbo is better than the jumbo slabs?
Yeah, so basically, see, it is like, all the planets getting configured to give you the positive result. So it's not just the size of the slab, it is the production capacity optimization or benefit because of the improved technology and the processes which are come in place, the raw material prices and the product mix. If these three are aligned at some point in time, then the benefits of all this together will help in improving the margin.
Okay, sir. Thank you so much.
Thank you.
Thank you. We have the next question from the line of VP Rajesh from Banyan Capital. Please go ahead.
Yeah, hi. Last time you had talked about that the growth could be 20 to 30% over fiscal year 22 this year. So given what you are seeing on the demand side, do you think that particular view has changed in any way?
At the moment, we believe that what we spoke about 20 to 30% growth over the previous year seems to be achievable unless there is some dramatic change in the U.S. demand outlook.
Okay. And secondly, in terms of realization, how do the domestic realization compare to the realization you get in the U.S. For same product, let's say?
Basically, in the Indian market, we don't just sell the product, which is typically the case in the U.S. market. We sell the product. And in the U.S. market, majority of the product what we sell is typically the slab. But in Indian market, we sell the product which is fabricated. And additionally, we also have an element of installation. So typically, since we are catering to three different segments like material, fabrication, and installation, there are three different buckets. So if you really look at all the buckets together, the realization is better in the Indian market. But then initially, because we are also investing a good amount of money in marketing, creating point of sale material displays at the dealer's place. So overall, I think there will be little incremental margin in the domestic and not exponential difference actually.
Right. And just going back to the US.
The operator here would request you to kindly get back in the queue, sir, for follow-up questions.
Sure.
We have the next question from the line of Sachin Kafera from Swan Investments. Please go ahead.
Yeah, thanks for the follow-up. So just one thing on this capacity expansion, you mentioned that the optimum can be 85. But if my memory serves me right, in the line 1, we have achieved high utilization. So is it that the configuration of the line 2 is a little different than line 1, or is it that, if you can just comment a bit on that?
Basically, the capacity utilization number, unlike in many other industry here, is again a function of what design you are producing. So you will not be if it is a basic design, then you typically have a higher square foot produced versus a design which has got more complication. You have relatively a lower square foot which is produced. So when we say 80-85%, we mean that based on the product mix what we have, we think that seems to be a reasonable number to achieve. So the same thing will translate between both the units, whether it is unit 1 or unit 2. If in a particular quarter or a particular month we have a higher production of basic versus lower production of expensive product, to that extent square footage may go up, but the realization may not necessarily match it. And it can be vice versa also, that the square footage can come down, but the realization may go up because we actually produced a high-end design. So we believe that 80-85% in our experience so far seems to be a number to look at.
Sure. So second question was on the capacity expansion. You mentioned that you will keep looking at opportunities and you cannot comment it right now. But just to get a sense, what is like the cost difference between a brownfield versus a greenfield? Because my sense is that as and when, maybe in 12 months or 24 months down the line, whenever we look at expansion, it will be more for brownfield. So if you could just give us a sense, normally for the same plant, if you have to go for a greenfield, the cost would be 100 rupees. What is typically the same plant costing when you go for a brownfield?
Typically, if you look at our infrastructure, the way we have designed our Unit 2, we can actually accommodate additional production line in it without having to do a expenditure or investment to the scale of greenfield if we had to set up a plant. So I think typically at least 20 to 25% saving you can have between a greenfield and a brownfield.
And because we don't have to do the infrastructure, we may also save in terms of the overall time to, operate.
But then we actually invested in advance. To that extent, you have a drag on your depreciation and the other return.
I understand. I'm just saying, but even in terms of the time to...
We should kindly get back in the queue, sir, for your follow-up.
This is a follow-up. This is the continuation of the previous question. I'm saying, sir, but the time taken to start the plant will also be lower because it's a brownfield versus a greenfield. You say sometimes it's like 3 years for greenfield, brownfield will be maybe like 2 years or 2.5 years.
Yeah, relatively the time will be lower than the greenfield because one is that your team is already available ready train on the product. Secondly, large infrastructure is already in place, and all your adjustments which we wanted to do in the machines are already told to the supplier well in advance. So all those learning curve related issues are already taken care in that.
Sure. Thank you so much.
Thank you.
Thank you. We will take the last question of the day from Mr. Pratik Singhania from Sage One Investments. Please go ahead.
Okay, not there. So if we have somebody else for a last question, we can take.
Sure, sir. Give me a moment. Let me check. We'll take the last question from the line of Aman Vij from Astute Investment Management. Please go ahead.
Yeah. Good afternoon, sir. On the new plant, what by Q4, what kind of value addition portion can we get? Is it like 10-20% sales will be value addition by Q4 or higher and lower? And also, if you can talk about the same for FY24 target. Second question is on the utilization part of the new plant. So every quarter we are seeing improvement. So do you think Q2 utilization will be better than Q1, and similarly every quarter we'll keep seeing higher utilization of the new plant? These are the two questions.
See, the target what we have is that at least 20% of our production should be of design. So whether it will be Q4 or in 24 is something which I think only next couple of quarters can answer that. So I think if they're able to come to 10% plus, probably you can start seeing the benefits of it in the numbers. That is on the mix side. On the capacity side, see, basically if there is a demand opportunity which we want to tap, we'll definitely go and take it because we have some scope on the capacity utilization side. So it all depends upon the demand and the needs of the market. So we're just closely watching how this duty scenario and how the US demand scenario will pan out, and probably we'll be able to get clarity when we talk about Q3.
Yeah, sure, sir. Thank you.
Thank you.
Thank you. I would now like to hand it over back to the management for closing comments.
Thank you, everyone. It was a pleasure talking to you guys, and look forward to chatting again in future results. Thank you.
Thank you, sir. On behalf of Pokarna Limited, that concludes this conference. Thank you for joining us, and you may now